What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Shout out to 11 Labs for making every video possible with their next-gen voice cloning and text-to-speech tools. Link in the description and profile. Let's dive in. Today we're breaking down support and resistance. Once you understand these levels, charts stop looking random. You start seeing where buyers may step in, where sellers may step in, and how traders plan entries, exits, and risk before the move happens. In plain English, support is an area where buyers have shown up before and pushed price back up. Think of support like a floor. Price falls into that area, buyers step in, and the stock may bounce. Resistance is the opposite. Resistance is where sellers have shown up before and pushed price back down. Think of resistance like a ceiling. Price rises into that area, sellers take profits, short sellers may step in, and the stock may get rejected. But the key is this: support and resistance are not perfect lines. They are zones. Markets do not respect exact pennies. They react around areas. So how do you draw the levels? Do not pick one random candle and call it support. Look for repeated reactions. Where did price bounce more than once? Where did it reject more than once? Where did candles stall, reverse, or struggle to break through? Support should be drawn where buyers repeatedly step in. Resistance should be drawn where sellers repeatedly push price down. The more times price reacts around a zone, the more attention that zone gets. The biggest beginner mistake is drawing a razor-thin line and expecting price to respect it perfectly. Instead, use a rectangle. Include the candle bodies and the wicks. Give the level room. That is why we call them zones, not lines. Not every high is resistance, and not every low is support. The strongest levels are tested, respected, and obvious to traders. If price keeps bouncing from the same area, that support matters. If price keeps rejecting from the same area, that resistance matters. The level matters because the market keeps reacting to it. When price hits resistance, sellers may enter and price may move back down. When price hits support, buyers may enter and price may move back up. When price is between support and resistance, that is the decision area. There may not be a clear direction yet, so smart traders plan instead of guessing. They ask, if price moves into resistance, will it reject? If price falls into support, will it bounce? If price breaks above resistance, is that a breakout? If price breaks below support, is that a breakdown? But support and resistance do not work every time. Sometimes resistance fails and price breaks above the zone. Sometimes support fails and price breaks below the zone. These levels are areas where price may react, not guarantees that price must reverse. When a level breaks, something important may be changing. Buyers may be taking control above resistance, or sellers may be taking control below support. Confirmation matters. A quick wick above resistance does not always mean breakout. A quick dip below support does not always mean breakdown. Look for strong closes, follow-through, volume, and retests. If price breaks above resistance and then holds that old resistance as new support, that is stronger than one random candle. If price breaks below support and then rejects that old support as new resistance, that can confirm a shift lower. So how do traders use key levels? Some look to short at resistance when sellers step in. Their target may be support and their stop may be above resistance. Some look to go long at support when buyers step in. Their target may be resistance and their stop may be below support. Traders also watch for breakouts above resistance and breakdowns below support. The point is not to predict perfectly. The point is to build a plan. Know where you are interested, where you are wrong, and where you are taking profits. Here's my take on support and resistance. I give it a 9 out of 10. Why so high? Because support and resistance are the foundation of price action. Even if you use indicators like VWAP, MAS, MACD, RSI, or Supertrend, you still need to know where the major levels are. These levels help you find better entries, avoid chasing bad spots, manage risk, and understand where price may react next. But it is not a perfect 10 because levels can fail. News can override charts, and choppy markets can create false signals. The edge is not just knowing the levels, the edge is respecting the levels, waiting for confirmation, and trading with discipline. Final takeaway. Support shows where buyers may defend price. Resistance shows where sellers may defend price. The best traders use key levels to plan before they act. Remember, I'm not a financial advisor, and this is not financial advice. Always do your own research before investing. If you found value in today's video, hit that like button, subscribe, and share it with someone who's just beginning their investing journey. This is Sat with Stocks by Sat06. No face, just facts in 5. Keep learning, keep investing, keep building. Peace.